Hey everybody, welcome to the Cafe of Knowledge. So glad that y'all all tuned in today. Please hit like and subscribe, please. As we know, this is chapter 12. Last week we did chapter 11, and last week we was basically discussing the employee schedules. All the employee schedules, how you budget it, how do you fit it inside the goal that you need to fit for your company. So if your company sets you a certain amount for a goal, you have to reach that. If your company tells you you only can spend a certain amount of money for a payroll, then you know how to do that now, and also know how to make an employee schedule. If you missed that video, you need to go back to last week, and that video shows you how to budget an employee schedule, budget your payroll plan, okay? Now, this week is chapter 12, and this week we're going to touch base on double entry accounting, okay? It's called double entry accounting, okay? So basically, everybody already kind of know how to do accounting. If you don't, then you refer back to my other videos. We have about 12 weeks full of videos, and it will show you it's very easy. Once you get it, it'll show you how to do some accounting, and this here is going to finish telling you how to do accounting. Now, this called double entry accounting, okay? Now, you got two different type of accountings when it comes to your business, like keeping up with paperwork. You have one paperwork called double entry accounting, and then you have one paperwork that's called debit and credit on sales, okay? So we're going to do the double entry accounting today, okay? So we're going to do both of them, but we're going to do the double entry accounting first, okay? Now, how you do that is, let's say that you bought something for your store, okay? Now, you're going to have a piece of paper, and the piece of paper, which I'm going to show you the chart as well. The piece of paper, you're going to have account on this side. On your far left-hand side, you're going to have the word account, and you're going to have three different columns. First column is going to be account. Second column is going to be debit. And the third column is going to be credit. Okay? So now you got account, your account, debit, credit. Okay? Now, what you do is, if you buy something, say if you bought some office supplies inside your store, and when you bought the supplies, say the supplies cost $200, okay? So under the account part, you will put office supplies, because that's what you spent money on, okay? Office supplies. And then in your debit column, and if those supplies cost $200, it will be plus 22. And that's because you bought in supplies, which that's the assets that your store have. Meaning your store owns those supplies. So you have $200 worth of pencils, papers, copy paper, pens. You have $200 worth of all that on your desk. Okay? But now on your credit column, it's going to be minus $200. So in your debit column, it's going to be plus 200, because you have that in your possession. It's yours. It's your assets. That's what assets means. You know, when they say, how much assets do you have? That means how much do you own. Okay? So your debit column will have a plus 200, because that means that's your assets and you have $200 worth of it. On your credit side, it will be minus 200, because you had to take $200 out of your pocket or your account and pay for the supplies. So on the debit side would be a plus because you have it, but in your pocket or bank account side, it'll be negative 200 because you had to spend 200 just to get $200 worth of office supplies. Okay, so it has to balance out. One has to be positive, one has to be negative. For another example, I'm gonna give you another example. Say if in your company you said, well, you know what, we need to buy a chair for the lobby so that people be able to sit down when they waiting on us and stuff like that, okay? And you go to a doctor's office or something like a hospital, they have chairs or seats or something sitting there, and you sit in those until they're ready for you. Okay, so let's say that your company bought a chair for people to sit down in. And so, say the chair costs $150. Well, you went to buy the chair. Now the chair is in your place of business. Well, when you on that double entry account sheet, you would put on the account side chair. And then on the debit side, you would put plus 150 because that debit means what you have, assets. What do you have? It's a chair, and it was worth $150. $150 would go on the debit side. Right next to it, in the next column on credit, it would say minus $150. That's because you had to spend money out of the company pocket or your pocket to pay for that chair. Okay? So then your debit side would be plus 150 and your credit side will be minus 150 because the chair is what you have, assets, that's what you own or the company own or whatever. But that's how you put it on a double entry account form. Okay? So that's how it goes. So then because your money, you took out money out the bank and took out money out your pocket, $150 just to buy the chair, that credit part is going to be minus $150. And they both, it's all on the same line, but they both should say the same number. It ain't no way that you could say, well, the chair was $150 and then you put on the debit side plus $150 and then put on the credit side minus $140. Like, that don't match. Somebody made a mistake there because it's the same thing. If that's what the chair costs, then that should be on the credit minus out of your bank account. Okay, so you just have to make sure those two numbers always match. One is positive, debit. The credit part is negative. Okay, so that's how that goes. So like we said, let's go back to the office supply. If you buy $200 worth of office supplies, then on the double entry form, because every business should have, any place that's operating as a business or it's a business, people should be doing double entry accounting. That way, at the end of the year, when your company get ready to pay tax or you get ready to pay tax, if you own the business, you know exactly what you spent it for, and your bank account. How is it? How much you took out of your bank account? Because all this stuff will balance. It'll tell how much you own, and then because the chair is your assets, the office supplies is your assets, all that stuff. If you had to buy a printer for your business, or you had to buy a computer, or you had to buy a phone, if you had to buy a $300 phone, and it's that company's phone now, and if that's that company's phone or your business phone, then you would say on the account side, phone, cell phone or whatever. On the debit side, if that phone was $300, you would put plus $300 because it's an asset. It's what you now own. It will be plus $300. And then on the credit side, it would say minus $300 because you had to pull that money out of your pocket or your bank account to pay for that phone. Okay, so the debit should be plus 300, and the credit should be minus 300. That's how you do, that's what's called double entry accounting. Okay, so now you know how to do that. And let me show you how it looks. And that's how it looks. Double entry accounting. You see the account, your office supplies, $200 plus $200, and then on the credit side, it's minus $200. Okay, because you see it says cash minus $200. Okay, and that's because the office supplies is plus $200 because that's what you now have. That's your assets because you own that now. Okay, and then your cash is minus $200 because you had to go into the bank account or your pocket to buy those $200 worth of office supplies. So now you took $200 out the bank just to buy those supplies. That means your credit side is minus $200. Okay, so that's how you do that. Okay, now that's how you do double entry accounting, and that's how you should be doing on your paperwork. You should have this type of sheet that's called, at the top of it, it should say double entry accounting. And every time your store go buy something for that store, you know, when they buy a mop or they buy this or they buy this or that, it doesn't matter. It go up under double entry accounting. Okay, and you do it that way. If you buy a mop that's $8, then on the account sheet you have to go to the account sheet, and then you be like, okay, the mop was $5, so you would pull out the double entry accounting sheet, and you would pull it out, and on the account part you would say mop, and then on the debit side you would say plus $5 because the mop costs $5. It's in your possession. It's yours. You own it. And that's what an asset is called, is when you own something. So that debit side would be plus $5. On the credit side of that form, it would be minus $5 because you had to come out of your pocket or go into the bank account and spend $5 for that mop. Okay, so that's what's called double entry accounting. One should be a positive, one should be a negative. Okay, and that's what it's for. Now that we got that cleared, another part of accounting is called debit and credit on sales. Listen closely. Debit and credit on sales. This is when you selling something to a customer. A customer buys something, and then you put the money inside the cash register drawer, and that means your sales went up. Because every time somebody comes into your store and buys something, that means the sales go up in your store. Okay? Every time somebody come in behind another person and buy something, every time somebody buys something in your store, that brings your sales up. Okay? So, when it brings your sales up, that's a good thing. That's an increase. Okay? So now, the second part of accounting is when you have a sheet that's called debit and credit on sale. Okay? Now, this is the sales of your store. Now, what this is that say if a customer pay $200 for a microwave, okay? They come in your store and they pay $200 for a microwave. Well, your store just bought in $200 because the cash register put $200 in the drawer. So if that customer bought your microwave for $200, that means you now have $200 in your store, which means your sales went up $200 because this person bought a $200 microwave. So you got $200 in your drawer, which is a plus 200, and then your sales just went up $200 more, which is another plus. So now in this case, it would be plus $200 plus $200, okay? So that means on this report, that's for just the debit credit on sales, you would have the account still on the side. You have 3 columns. You have account, you have debit, and you'll have credit. Just how you did for double entry accounting. Then you'll have another sheet, but that sheet is called debit credit on sales. And then that will have an account section. Then you'll have a debit section. Then you'll have a credit section. And then on the account section, it'll have cash. Cash is what you bought into the store. Okay? And then the cash is $200 plus $200 because you just made $200. Okay? And then the next line will say sales revenue. Well, your sales revenue is $200, meaning your revenue means your sales are going up. Your revenue, sales revenue means when it's going up. Okay? So then a sales revenue, you would have plus $200. So both of them will be a plus on this side. Like double entry accounting, you have a plus for the debit and a minus for the credit. But when you're doing your debit and credit on sales, both of them will be a plus. $200 that you put in the register because the customer bought that microwave for $200. So that's a plus. The debit is a plus. And then for the sales revenue, it's a plus because your sales just went up $200. So that would be plus $200 as well. Okay? So this is how that look at the bottom. That's how debit and credit on sales look. See, so if they bought a microwave for $200, then on the account side, you have cash. For your debit, it would be plus $200. Credit will be plus $200. Okay? Now look at the whole sheet, and you can take a screenshot of it. And you look at the whole sheet, because the whole sheet, you remember the first one is double entry accounting, and that's an example how to do that. And then the bottom part is debit and credit on sales, and it shows you how to do that. And you can screenshot that. I just gave you now how to do double entry accounting and how to do your debit credit on sale accounting. Okay, so that's how you keep up with accounting on the job or in your business. That's how you do it. And we touch base with accounting when it comes to accounts receivables, accounts payables, when you're paying bills and when you're receiving bills and all that. We have done all that, and this is the last step that you needed to know about accounting. And this is, like I said, the first part that we did was double entry accounting. That last part we did was debit credit on sales. Okay? And that's your revenue. So you just go over that and play with that and just make sure that you understand it. But that's how you do it. So if you are doing the accounting for your business or for a company or whatever, you know how to do it. You know how to do your accounts receivables, accounts payables. You know how to do all that. Make sure all the invoices and all that stuff right, because we've done that previously. If you are just joining us, you might want to go back and refer back to the videos that say accounts receivables and accounts payables and learn more about accounting. Okay? But this was the last step for accounting, and that was when we just did the double entry accounting, and you know how to do that now and what that means. One sheet for double entry accounting, you know how to do that, and then you have another sheet inside that company that says debit credit on sales. Okay, and you have to keep up with all these things. Each month you would put these papers inside of your week 1, week 2, week 3, week 4 file, the way we did way back when we was doing our inventory, and when we was saying that you got to have a file for this and you got to have a file for that. Each month, these 2 papers will go into the file as well. That way you can always refer back and you know what you have paid for, how much it was, what came out the bank. You say, oh, okay, you go back to it and say, oh, okay, I bought a chair for $150. And so that's why this $150 is out of my account, because on the credit card it's going to have minus $150. And then you'll see what you spent and bought the whole month. And then on your other sheet, your debit credit sales, you would see what people purchased all month and how much in sales you went up all month. So that's how that go, y'all. So y'all learned about that. I see y'all next week when we get ready to do chapter 13. Okay, so I check with y'all next week, and if anybody have any questions, be sure to email at us at cafeofknowledge88@gmail.com. And that's all I have for today. I see y'all next week. Bye-bye. And gain knowledge to prevent blockage. And we all know what that means. The more you know, the harder it is for anybody to block y'all from y'all goals and success. See y'all next week. Bye-bye, y'all.